Item number 4.
Receive financial statement for period covering October 1st, 2017 through March 31st, 2018.
Ms. Small.
Good evening, Mayor and members of council. So thank you for the opportunity to present the second quarter financial statements. It's kind of important for you to get a good look at where we're at financially through halfway through the fiscal year. So tonight we're reporting as of March through the second quarter. The first fund we always look at is the general fund. On the balance sheet side, our cash balance is up $2.7 million compared to the prior year at the same time. A lot of this is related to last year's fiscal year-end results. $1.9 million added to the cash balance at the end of that fiscal year. Our revenues this year are tracking ahead of last year by $2.6 million, and our expenditures $1.5 million, and those are kind of tracking with budget, so that also adds to that cash balance at this point in time. The next slide here is the general fund revenues. We like to show you where the revenues are at compared to budget halfway through the fiscal year. As you know, on ad valorem taxes, we collect most of that prior to February 1st. So our collection rate for the current year, tax year, is 96.16% compared to 96.09% compared to last year. So we're tracking very well on property tax revenue collection. Our property tax revenues are up $2.8 million or 6.3%, and that's due to increased values that we experienced this year. Our sales tax revenues, as you've heard throughout the year, are comparable to last year. We budgeted for those to be pretty much flat. We're slightly ahead at just $66,000 through March. And all other revenues so far year to date are comparable to last year and on track with budget. On the expenditure side, this chart shows you the expenditures as they relate to being halfway through the fiscal year. March is, of course, 50% of the year. And as you can see, most areas are at or below the 50% mark. Just a couple of areas, Public Works and Neighborhood Vitality or Neighborhood Services, had a couple vacant positions, making them be a little bit less than that, quite a bit less than that 50% mark. Vacant positions that maybe haven't been filled yet or were filled partway through the fiscal year. Of course, our non-departmental is our debt service, where principal and interest payments are due in March, so that gets way ahead of budget at this point in the year. But we're pretty much on track in all areas for general fund spending. The next fund is the 4B Mesquite Quality of Life Corporation Fund. Here, the cash balance is down 1.8. This is related to project spending, which takes place over multiple fiscal years. There was a contribution into the fund, and that's related to the Grove of Honor, if you notice that on the financial statements. On the expenditure side, this is mostly projects that are approved by the 4B board and you as council each year. The transportation projects this year are the debt service related to the street projects that the 4B fund has agreed to help with, Military Parkway Trail and Gus Thomason. On the Parks and Rec side, of course, we're funding some of the operations, highway corridor maintenance, Florence Park updates, Shannon Road land acquisition, and then there's a runway rehab project going on at the airport. So that's the 4B fund. In the Water Sewer Fund, our working capital has an increase of $7.4 million over the prior year. Again, a lot of that is the result of last year's fiscal year-end results. $6.2 million was added. And as you remember, we've been building that working capital balance back up so that we are in a position to stabilize the rates and also be able to fund more infrastructure maintenance to the system. As we, during the drought and the recession, we had to pull back on some of that, so it's getting that up to the level where it should be. Our revenues are up $1.6 million. This is the result of the rate increase. Our consumption, as you'll see on the next chart as well, is pretty even compared to last year. On the expenditure side, of course, we are experiencing our increases from North Texas Municipal Water District, both for purchased water and the wastewater treatment expenses. And those increases are offset by a decrease in the required debt service payments for this year. And that's just a reflection of the schedule, the amortization schedule of the debt. Overall, our expenses are up just slightly at $64,000. This chart does show you the gallons of water billed. And in our first quarter, we were 6.6% up. Second quarter, we're down 6.6%, so pretty much flat in consumption for the year. And that's a reflection of the amount of rain we've had one year compared to the next. The next fund is the Drainage Utility District Fund. Here, our working capital is just down slightly, $4,000. Revenues are up slightly compared to the prior year at $10,000. Our residential charges are actually down a little bit due to a timing of a year-end accrual, but the commercial charges are up $29,000. Overall expenses are up year-to-date compared to last year by $50,000. That's just the timing of some annual payments that are due related to drainage reporting and fees and testing. Our drainage projects this year, we've transferred half of that amount over to the projects as planned, and those include Thomason Square and Town East Boulevard drainage projects for the DUD fund. For the municipal airport, and I might just say for the airport and the Convention and Visitor Bureau and the golf course, you also received a report in your Friday packets from those departments that kind of supplement what's been going on in their operations. For the airport, there's an increasing working capital over the prior year of $17,000. Their hangar rentals are up 13.1% compared to last year. And the airport manager, he noted that, there are 29 new hangars that the city took on last year, and more than half of those are rented out now. So that's a good thing for the airport. Fuel sales dollars are up 3% compared to the prior year. However, gallons sold are down slightly, down 5.9%. On the expenditure side, personal services are a little bit higher compared to the prior year, and that's due to the overlap of the retirement and then overlap with the new manager coming on board. So a little bit of extra expense there this year. Fuel costs are up approximately 7.3%. So, and if you remember in the airport, our sales price is a margin above the cost, so that fluctuates with the cost of fuel. So that's why fuel sales dollars can be up, but the actual gallons sold can be down. This chart just shows you the gallons sold. This is total gallons sold. One thing that I know that Mr. Pratt did in his report was he broke this out between the recreational fuel and the commercial aircraft fuel, so that helps you get a better picture of that. This is total gallons sold. First quarter gallons sold were 1.7% more, and then the second quarter was 13.3% less. On the municipal golf course, overall the revenues are up about 0.7% compared to the prior year. Rounds of golf are down about 5.5%. They had 14 rain days during the second quarter, and also some freeze days where they had to cover the greens, so that kind of hindered their operations. Last year, the winter was not so wet and didn't have maybe the freeze days compared to this year. So overall, their expenditures are down, so they've done a good job when they've not been operating on those closed days. They've kind of tried to temper their expenditures as well to offset the loss in revenue there. Utilities are slightly more due to water charges, and that relates to the first quarter last year compared to the first quarter this year. Last year was wet, this year was dry, so the increase in watering there. They have a net loss year-to-date of $75,000, but last year they were at a net loss of $107,000. So they're making improvements there, trying to get to a positive bottom line by the end of the fiscal year. This chart just shows you those rounds of golf. Again, first quarter, they were 2.6% more. Second quarter, 14.2% less due to those rain days and freeze days. The Group Medical Insurance Fund, here the revenues are less than the prior year by about $489,000 at this point year to date. Some of it is the timing of the city contribution. Now, the city's contribution to the fund will be 100% by the end of the year. The other part of it is last year we had some higher claims where stop loss kicked in. So we had stop loss reimbursements last year already at this point of $277,000. We don't have that this year, which that's good. We don't have the high claims this year. And reminding you that there was no rate increase in the revenue side of the fund for fiscal year 18. On the good side, the expenditure highlights our health claims are $48,000 less than the previous year at this point, and pharmaceutical costs are down $160,000. So we have good things going on the expenditure side. We do have a net loss year to date of $988,000. There is a planned net loss here, a budgeted net loss of $1.4 million. We're hoping to turn that around some and improve on that. But so don't be alarmed at the net loss year to date. We're kind of tracking according to budget. Okay. We'll be discussing the Health Claims Fund more during budget season, which is coming up. This chart just shows you where the claims here are tracking less than the two previous fiscal years. In the General Liability Fund, our revenues are up slightly, 1.1%. This was due to the rate increases to the departments to cover the cost of operating the General Liability Fund. Overall expenditures are in line with budget. We have a net income year-to-date of almost $300,000, so that helps us. We're working toward turning around the negative fund balance in that fund. So we're on track with budget there. In the hotel occupancy tax fund, our revenues are up 6.2% compared to the prior year, year to date. First quarter, you remember we were down 10.7%. They've turned that around. Second quarter is up 23.6%. So expenditures are on track with budget, and net income year to date is $304,000. This chart shows you the revenues, like I just mentioned. First quarter was down, second quarter is up. And then we like to show you these two additional charts. When you're looking at hotel occupancy tax revenue, it's good to understand maybe the quarterly average daily room rate changes from one year to the next, to the same quarter. And then we'll also show you the occupancy rate. So here you can see we're comparing, like if we look at the second quarter of 2018, Mesquite is in the orange, Dallas metro area is green, state of Texas is the maroon color. So for the second quarter, quarter two of 2017 to quarter two of 2018, the daily room rates were increased by about 4% for Mesquite. If you look at the next chart, then you can see for the same quarter, the occupancy rate for Mesquite was up 1%. So those two things combined would have driven the revenues to be up for Mesquite in the second quarter. But it gives you a good picture of the Metroplex as well as the state of Texas. So, and that is the end of my report, unless you have any questions.
Any questions for Ms. Small tonight? We have one. No, sir.
On the airport, if you were to take out the dual costs and the personnel services and the overlapping of the staffing, would that take us to either a net positive or a zero?
Yes, we would be pretty much, we'd be either break even or slightly positive. Yes, okay. So it's looking good.
Very good. And then I noticed that in the Friday report, and this may be beyond, I don't know if you helped prepare the Friday report we got with regard to the airport.
I didn't prepare it. Eric did. So if you have questions, he is here.
Okay. I will ask that then.
Yeah.
There was a significant increase from on a year-over-year basis of jet aircraft at the airport from, I think it was 2 to 8 or 2 to 6. What do you attribute that to?
So the chart that you're referring to is talking about based aircraft at the airport. The last report that we had was that we had 2 based aircraft. Per our count that we've made this year, we have about 8. And I really attribute that to having the facilities available to house these planes. Whenever they call and they're looking for hangar space where they want to be, they're really looking for a spot where they can put it right then and there. And we've been fortunate to have some individuals who have been building these facilities. They're looking for tenants, and we've been able to help them out as far as getting those jets now at our airport.
And with regard to the jet aircraft that are now at the airport, would those jet aircraft would have been impossible from a insurance standpoint to base those aircraft at Mesquite if there was not a control tower there?
For these corporate aircraft and for these jets, there is a hike that they take on their insurance rates if they are based at an airport that is not towered. And so that is something that they do consider whenever they're selecting their base.
So certainly the construction and the operation of the control tower contributed and made it a lot more favorable environment for that type of aircraft to be based here.
Yes, sir. It was definitely a consideration that was a positive for our airport.
Perfect. Thank you.
Thank you.
Any other questions? All right, thank you very much.
And
yes.
Cliff, and just to compliment your staff, all 3 of the reports, the golf course, the airport, and then also the CVB report, I think were just fantastic presentations of data and information, and really appreciate the hard work that everybody did to prepare those reports.
Thank you. We welcome any other feedback that we can do to improve those, since that was our first time out. Thank you, Mr. Noche.
That's good. Yeah, we appreciate it. Thank you.